So as rightly pointed out, markets are at record levels, and of course, a lot of stocks have done really well. So a lot of the good news seems to be pricing in terms of the earnings as well. So let's look at the overall picture first. For Q1, what is the aggregate that one needs to watch out for? From a net profit point of view, for Sensex, the growth is expected to be 18% YOY. For Nifty, the growth is expected to be 25% YOY. But on quarter-on-quarter basis, it will see a decline of close to 8% both for Sensex and for Nifty. So that's the aggregate number on the earnings. Now look at the individual sectors. I've just looked at a lot of research reports and identified the individual stocks which will do well. But before that, the sectors which are actually likely to do well in terms of overall growth is going to be the domestic cyclicals, the likes of banking and financial services and autos. They are likely to do well, but the drag is going to come largely from the metal names as well as the cement stocks. These are overall on an overall basis, they are likely to drag. Now let's look at the individual sectors which are likely to do well in Q1. First, look at the OMCs. The consensus is that most of the OMCs will see a bumper quarter this quarter, and that's largely because of the elevated market margin. So look out for OMCs; they'll report very well. The second sector which will do really be good is the banking. Within banking, the overall consensus is that the NIMs can compress between 10 to 20 basis points quarter on quarter for most of the banks. So that's the overall on banking. Now coming to the autos, this is another sector which is going to report strong numbers. So most of them are expecting a strong quarter, and there's going to be a margin expansion as well across the auto names as well. Now look at the cement sector. Within cement, the volume growth is going to be quite strong, but the margins are expected to be flat across all the cement names. So that's for cement. On consumer durables, it's going to be largely a lackluster quarter across most of the companies. That's the overall feedback. The consumer staples would be interesting because there is a mixed bag. Mid single digit volume growth, but high single digit growth in terms of value as well. So that's the kind of consumer staples which can report the numbers. The other important companies sectors to track would be NBFCs. Like banks, even for NBFCs, there could be a margin compression across most of the companies, and lower NIM growth is something which a lot of analysts will be tracking very closely. Gas utilities will be another big sector to track. I spoke about OMCs doing really good this quarter. Even that's the expectation for the gas companies as well, that they are likely to report good numbers on a quarter-on-quarter basis. For metals, there's going to be a contraction in terms of the margins, especially for the steel companies. The street is expecting 2,000 rupees per ton contraction in terms of margins for quarter-on-quarter basis for most of the steel names. The big disappointment, so to speak, for Q1 is going to come from the chemical stocks, chemical sector companies. Most of the specialty chemical companies are likely to report very weak numbers on the back of destocking. So that's one sector which can surprise negatively. And technology, Rima extensively spoke about it. I'll just say one line. Seasonally, it's a strong quarter for most of the IT names, but it's going to be very divided because a lot of companies might surprise on the positive as well. So that's the overall picture on what individual sectors can do in terms of Q1 earnings. Now, I was just looking at some brokerage notes as well. Citi has put out an interesting note where they've mentioned some individual names as well, which is something to watch out for. In terms of positive surprises, according to the Citi note, watch out for few names, the likes of ICICI Bank. That's likely to report a very strong quarter-on-quarter numbers across among all the private banks. So ICICI Bank is something which is going to positively surprise as per the Citi note. There are a couple of other names as well which are likely to positively surprise in Q1, which includes ICICI Pru Life, VNB margins, and potential for an upbeat in terms of medium-term stance as well. So even that's going to be a big surprise as per the Citi note. The third interesting stock would be Nykaa. Among the the recent listings names, this is one stock which is likely to surprise on the positive side because the EBITDA losses are going to decline much more than what the street is penciling in. So that's the positive surprise which can come in. Look at some negative surprises as well which Citi has put out. Within banking, Axis Bank could be one stock which can actually surprise on the negative side on the back of moderation in terms of margins, and the growth may lag the peers as well. The other stock which can disappoint according to the Citi notes is Tata Steel. Even in Tata Steel, I spoke broadly about steel, but for Tata Steel, the weaker than expected European performance can actually dent the overall performance for Tata Steel. And the third stock which Citi has a negative view in terms of earnings is SBI Life. While all the life stocks have done well, for SBI Life, the high base of non-par and lackluster retail protection is going to impact the Q1 for SBI Life. So that's the overall picture. The markets have done really well. A lot of stocks have priced in big positives. So Q1 is going to be quite exciting and quite interesting as well as far as earnings are concerned.